Hello, what a horrendous couple of days we've had in crypto markets. Very, very little in the green. But I have to say, we had got a little bit frothy and moved really hard on the upside, and we were kind of due a pullback. For example, if you compare what we're doing, if we take a look at the S&P at the moment and how that's trading at the highs, this week, in November, seasonally is a really bullish week for stock indexes. I kind of thought that that would help us hold up the crypto market, or at least, be a risk on environment for stock indexes would help. But instead, we've seen the opposite. However, there is one major difference between what happened in stock indexes and what's happened in the crypto market. And that mainly is this big, this is a daily chart of the S&P. And you can see we had this big breakout day on the election day, the day of the election results. And this market came all the way back and retested that breakout before carrying on higher. It kind of gives it a lot of strength. Whereas in the Bitcoin market, if we take a look at what we've done in that on the weekly, this is a daily chart, sorry, this big breakout day on the 6th of November election results, we kind of just kept going. No pullback and retest at all. We screamed higher, sideways, screamed higher, sideways, and carried on. It's almost as like nobody believed it and everybody was playing a bit of catch up, which makes me a little bit nervous, because if we do the same and we come back and retest that election day breakout, and let's face it, that was the breakout of this consolidation that we have been in since March, that kind of points to a pullback towards 70,000. 68,000 would be the 61.8 fib retrace, so that's quite a long way to pull back. At the moment, if we take fib retraces from the low that we made on the 5th of August for the whole big run, I don't think this is over. But I would like to see what happens at this 87,700 level. Now, because we normally get there in 3 waves, so we've got a big swing lower, I would expect to bounce somewhere along the way, and then I would expect a bigger drop down into this 90,000 level and maybe below it to 87,700 next in Bitcoin. So if you're looking for swing buys or want to buy some on the pullback, this, we're not there yet. I think we've got a little bit further to fall. If we go big picture out to the weekly, the 236 fib all the way from the weekly swing in that November 2022 low is down here at 79,700. That would bring us back to that, towards that, election breakout, and potentially 38.2 all the way back from that low gets us down there. But for now, I think the daily 20 moving average and this previous swing lows may be more likely. So somewhere between that 87,000 and 90,000 level is where we can expect our first attempt at a bounce and the buyers to hopefully step back in. So that's what I'm looking for in Bitcoin, and pretty much everything else is in a pretty nasty pullback. I thought ETH would do better, but it hasn't. If we take a look at where we are in ETH and where we are likely to come back to, I'm going to zoom out. I've been looking all the way. Now, when I put my fib retrace levels from this high to low, because we aren't really trading at new highs like Bitcoin. And when I do that, I have to say that I don't like how these work. I don't like this reaction at this 236 fib or any of the other levels, because they don't seem to be kind of working the way they should. And when that happens, I then look for the bigger one, and I look for where are the fib levels that the market are looking at, and where is that support and resistance. And if I do this from the high that we made in 2021 to the lows in 2022, I feel like we've kind of got a better pattern going on here. And we reversed at a 786 fib. When you do that, your first target is the 38.2 in 3 waves. That's what we did textbook. And then you kind of look for it to come back to the middle and consolidate. And so potentially, we've got a double top high and a swing failure here. And I wouldn't rule out in this, to be honest, because these big levels We blasted through this 50% level in the middle without stopping and respecting it. I feel like we are due in ETH then. See this huge previous lows here? We could see a bigger pullback back in towards these daily moving averages, back down to 2,800 in this kind of swing pattern. Maybe we don't come back that far. Maybe we just do what Bitcoin did, come back to these previous swing lows, come back to, let's hide this 236 fib of that swing. Let's, hide it. So if I do that from this low to this high, this would be a 38.2 retrace, and this would be a 50% retrace. So 2,900, basically that round number, 3,000 level, and the daily 200 moving average, it may be in our first swing, and then maybe back to 2,800. Now, if I'm wrong about this pullback being a little bit bigger than expected, and then we're just going to hold this 236 fib and keep going, then 3,200 should be where we reverse. But for me, I kind of like the way this is playing out. I kind of feel like we need a bigger pullback, and that big round number 3,000, the daily 200 moving average, this previous swing low, for me, if I'm looking for a swing entry in ETH, all of it adds up to this being a better place to be looking. Could be wrong, but that's where I am looking at the moment. Let's take a look at some stuff that is more interesting. Let's get Ripple. I've got some requests for Ripple and Solana. Let's get them out of the way first. So Ripple is at a pretty big deal level. We had this as our kind of first target level. So how is this calculated? I measured from this low to this high, projected from this low here, and this 61.8 was our resistance, and this is our equal measured move target. So we are at a kind of resistance level. When I look at this is lovely three-wave correction. Here's our wave 1, wave 2. I expect this to make a wave 4 go sideways here and then continue higher in Ripple. And if this is in fact a wave 3, the most common retrace of a wave 3 is 38.2 or 50%. So that would mean in Ripple, let me just make sure I wind that up correctly. That would mean in Ripple, if we close underneath 136, we come back to 119 most likely, and potentially 1.05. So 1.19. We could, to be honest, in a wave 4, just trade sideways in a big triangle and not break down. But a close underneath 1.36, where we get stuck underneath it and it becomes resistance. At the moment, it's looking like okay support. Then these are the two levels, and I think potentially this 50%, because it brings us back to this swing low in Ripple. So that's what I'm looking for at the moment. This is holding up really well, I have to say, compared to some other markets, and I think by the time this 20 moving average catches up, either if we go sideways or if we pull back, then it will be ready to launch for the wave 5, and our target for that would be 2.14 in Ripple. So not looking too bad in this one at all, and not really giving that much back either so far. In Solana, we are pretty similar. Let's talk about where we are at these previous highs. Now, potentially from the low that we made in January, we have done January 2023, we have done 5 waves up here. When I look at this, I'm not quite sure that we're done. I actually think that we could still see another swing higher, but previous highs and lows are always one of those levels where you'll see people come in and take profit, and so it's just a matter of how far back are we going to pull back. If we take this most recent swing from that August 5th low, we're sitting on this 236 fib from this swing. Remember, I either put my fibs on this most recent swing or the whole 5 waves from this low, and that gives us our second support here at 203. So we can say if we lose this first support that we're sitting on at 227, we are sitting on it really nicely, trying to make a base here in Solana. But if we get underneath 227, we're likely to drop further back to this 205, and this is a really kind of big, really cool place to be looking for bigger longs. It would be, you know, back to the highs from the beginning of this year in March, April. It would be this lovely previous swing low. So there's lots to like about this second level in a bigger pullback. And if we put our moving averages in, you can see, yeah, if we lose this 20 moving average, then 205 next for Solana, unfortunately. At the moment, we're just trying to make a bit of a base here, but quite, you can see at the moment it's just corrective sideways. We're in a downtrend on the hourly. We're holding underneath the hourly moving averages. This little rally here was corrective when we lost it, so no reason to buy it. In fact, we just kind of need to watch this range and see if we can launch out of it here, or if we continue lower in Solana. Next one I'm going to look at is, so what's doing well? If we look at this heat map, SUI is doing okay, and AVAX has just gone green. It's been red all day. So well, let's take a look at some of the ones that are doing well. My favorite one actually that's doing well, I think, is INJ. So SUI, I'm a little bit cautious with this one. And if I look at the weekly and you look how far away we are from these weekly moving averages, and because I can count 5 waves up, this is far too overbought for me for it to look at it for a swing buy. I feel like, yes, are we bouncing for the daily 20 moving average, which is really good support previously? Could we do one more swing higher here in this one? Yes, we could. It's just being up here at these highs doesn't make it compelling for a swing buy for me. I would really like to see a bigger pullback. And when I go down, this is what I mean about hourly moving averages. For example, in Solana that we just looked at, they were holding us down all the way down. Here we're popping up. I think that SUI is, you know, certainly if you wanted to put your money into something, SUI, INJ are much better than most of the other ones out there. But these previous highs, So when I'm not sure and I'm looking at a correction like this, I put my fib retrace levels on from the highs to the lows, and I literally trade it in a correction, level to level to level, like a step ladder, right? Because I don't want it to fall back, because then I'm wrong. And here we are at the 50% retrace from this high, which means this 38.2 needs to hold as support, or we've rolled over for a bigger correction, and then we move up. If we move above this 50%, 61.8 next, and this becomes the support. Here, I don't want to drop underneath that, and so on. And then the 786, I don't want it to drop underneath the 61.8, because if it does, it will do a bigger pullback, and then I'll get out and wait for that bigger pullback and a higher low. So I have to say that, especially, you know, now I look at this from this high to low, SUI being stuck at this 50% level, this is a little bit of a tricky level. If you like SUI though, and you were stalking a better entry for it, having seen this bounce, what you really want to see to buy it is 3 waves back, and you want to get in at 50%, because mean reverting markets tend to keep mean reverting. So 50% from this high to low would be kind of your ideal place to look for a long entry. 3.25 then, that's your ideal. 3.25 would be your ideal place to look for a long in SUI if we do that bigger pullback here. If we keep going, climbing up through the levels, so we're still going up, no problem. So that's what I'm seeing in SUI. The one that I am looking at is INJ. And let's talk about why I think that's quite an interesting one, if I can. Not everything is going down, but the ones that are going up are few and far between. Very hidden. Okay, I'll just draw it because it's quite an interesting chart to look at. We'll look at INJ on Binance. So first of all, when I look at this big picture, I look at this, I see a lovely from the lows in 2022, 1, 2, 3, 4, 5 waves up, 3-wave pullback. Here we are, made a nice bottom, and we are pushing above the daily weekly 50 moving average and climbing our way higher here. The one thing that always makes me nervous is if it's looks like a 3-wave measured move. But again, if I'm not sure, I put my fibs on from the high to low and we climb level to level to level. And in this coin, we validated this 236 fib here on the weekly really nicely. You can see it was resistance, resistance, and then support. And here we are pushing above 38.2. Also previous highs, which means that we're wrong. We can move up the level where we're wrong. We can say as long as we don't fall back underneath this 38.2, we're still going higher. And sorry, 28.6 is the level that we need to hold above, and 33.26 is the next. And potentially we're beginning the next big swing, and this would be 1, 2, 3, a big wave 5, hopefully. So when I look at it on the daily, you can see this has had a lovely push through this resistance today. 3 days paused at this level, 28.60, we need to hold above it. So if you're looking at this thinking, oh, this is quite tempting, and you're trading shorter term, any pullback that holds above that, so I think we've done one already, we're beginning another one. So on this pullback, we want to hold above 28.60. That's the level that you buy against. That's where you're wrong, and we're looking for it to continue higher and breaking above these highs. It's looking pretty interesting, I think, for INJ, and it's certainly holding up compared to the rest of the market. So another one, I tweeted this chart for Vanry. This is one that I was in. Let me find it. Probably get it up. Here we go. So one of the reasons that I like this Vanry chart is that we are holding above the daily 200 moving average. The 200 moving average for me is the king of the chart in terms of trend. However, when I draw fib retraces all the way from the high that we made in March of this year, we are stuck now at this 236 fib. And the other thing that I'm being a little bit cautious about, because I want to be bullish, holding above this 200 moving average, and when I look at how it's holding up compared to what the rest of the crypto market is doing, it's pretty strong. But the other thing I'm concerned about is from this low, this is also potentially an equal measured move, which is corrective, unless we can close above this 0.13 resistance level. So we've got the combination of this equal measured move from the lows and the 236 fib as our resistance, and then we've got our support here at the 200-day moving average and the back test of the 61.8 level at 0.115. So I'm wrong to be bullish if we close back below 0.115, and next swing higher if we can close above and hold above 0.136. That's what I'm looking for. When I look at it on the lower time frame, this is where I bought the pullback. I always said if we broke back underneath it. We did a nasty choppy retest of it, and here we are up here again. We've hit the first resistance level, and so now it's just a matter of, are we going to sustain it and keep going, you know, waiting for the next turn higher and see if we can break out. And that's the zone that I'm looking at. And because everything else is in the kind of sideways correction, I wouldn't be surprised now that we've got here that we may continue to see a little, it may struggle, you know, if everything else is in a really nasty pullback, then even the longs are going to look okay, but they're going to not be able to really motor until the broader market turns higher. So Doge was the other big Trump trade. I got out of this when it hit the big 50%. Let's go to the weekly. I got out of this when it got to the big 50 fib retrace from this high to this low, because they can get quite nasty if you turn at them. But it's starting to look like we've pushed a little bit higher, and sometimes at this 50% level you go sideways. It's not really a 61.8 fib level, so I'm gonna keep these fibs up because we got such a good reaction here at this 236 fib. But sometimes at these 50% levels, you have a proper bull bear fight. They're either really sharp and you turn on them, or you get a proper bull bear fight, which is what we are looking at. The other pattern that when you overshoot a level and you're not expecting it to, the other pattern that you tend to see is a head and shoulders pattern very often, or an inverted head and shoulders pattern. So that would be a good alert, you know, for a bigger pullback if that unfolded here. At the moment though, let's say that the back towards these lows and back towards the daily 20 moving average, which is around 0.34, is where I think we will come back to. And if we should have held this and we didn't, so if we come back here and then we bounce and we make a pattern like this, or a head and shoulders pattern like this, that, you know, would be a bigger warning that we're going to see a bigger pullback in this Doge. And then I'm going to lean on that 50%, say, you know what, we might come back 50% of this whole rally and back to this election breakout. I don't know what would happen that might trigger that. It seems to me, you know, that the big macro picture is really favorable for these Bitcoins, but it's just for Bitcoin and Trump coins, and, you know, that it's just that I feel like we went too far too fast and it all got a little bit frothy. It was really interesting to me that all of the, you know, when we had that big rally early this week, over the weekend and the end of last week in the dinosaur coins, it was amazing to see how most of that volume came from Korea. The volume on up, the trading volume on Upbit went bananas after the Trump election, and they were buying all the big old names, you know, Doge, Ripple, XLM, and so on. So that was pretty impressive to see, actually. Well done, South Korea. But we have just got a little bit into nosebleed territory in terms of too far too fast. And so if you think, you know, in previous bull runs, let's go back to Bitcoin, in previous bull runs or ETH, it was very normal to see like a 25% pullback in, and then turn on a dime and continue to rip higher. So it's just a matter of learning to ride the waves. And, you know, I really do feel like we're back in a bull run. So that's what we can expect to see, unfortunately. Still, good times are here. So talked about Vanry, Doge. So what else I think is interesting at the moment is maybe how so many of these altcoins and meme coins particularly have done equal measured move bounces. So Pepe is a really good example of that. I suppose that's the biggest, although this is an ETH coin. So if we go all the way out to the lows here, and I measure from this low to this high and project it from here, where we have been unable to go beyond is this equal measured move level at 2250 in Pepe. When you draw that, the key support comes in at a back test of this 61.8 level. I'm going to show you how I draw this, right? Let's take this back to default. So when you use this fib projection tool on TradingView, it'll look like this. You can use it like this. You can extend it out. So you measure from this low to high, extend it out. And you can draw in all the levels and have the colors, but I find that a little bit too messy for my chart. So this is how I fix it. So I get rid of the background and I get rid of the levels that I don't want, because I really only want on these fib projections the 61.8. I want the equal measured move, the 1.618. I want the 1272. So 1272, 1.618, 2.618, 3.16 and 4. Those are my levels, right? In fact, I'm going to make them all one color so that I know what I'm looking at. Right, like you can make them less dark or whatever. So that's how I use this tool, right? So this 61.8 fib level projection from this low, I've got to extend them. This is how. So extend the levels right. Extend, there we go. So we've reversed at the 61.8 level. So I'm now looking for this 618 to hold a support, 1614 then, and we're not kind of quite back there yet. And ideally I'd like to see it, you know, in three ways. So I think potentially, so I'm going to be bearish if we get back underneath this level, especially if we get stuck underneath it and continue lower. And when you've got a big equal measured move like this, then the most common retrace, I have to say, over the whole move, so you measure from this low all the way to the high, is a 786 fib retrace, and you kind of go level to level to level. So this 61.8 fib at the moment is now key support. The other way we could look for where key support is all the way back to these lows, to this high, and we could say it's where the 236 fib is. So we're already underneath that. We know we're in a bigger correction then. And if we look where this next fib support is, at this 61.8 level, this is a 38.2. So that says that we have got further to fall as well. In Pepe down to 16.49. And I have to say, so many of the coins that I've looked at, especially in the meme space, have all kind of done that same pattern. Here's, let's find another one, Bonk. So Bonk from the low here in January 2024. I measured this first swing, and here we had a big rally, 3-wave correction. So projected from this low, and this is why this was my first target, and this is resistance. It's now support, right? So this back test of this 61.8 level, we need to see hold as support. Bonk has almost got there, 38.96 then. If we find support here, I would love it, because this would then be a wave 1, 2, 3. This would be a wave 4 ideally, and we would continue higher. And I would look for a wobble here, but this 1.618 would be my projected target up at 77.63. This is also kind of a back test level. If we drew this as a big giant triangle consolidation that we broke out of, then this kind of would be back testing our breakout level. So a good place to look for Bonk, and a good place to see if this rule about the measured moves holds, and if we can continue higher from here. But so many, you know, even on smaller time frames, I see this pattern sort of everywhere, and so that's what I'm watching out for. Good luck.